Recently, Accenture, a global leader in consulting and technology services, unveiled its quarterly results in the US, and this has sparked a wave of optimism in the Indian IT sector. With revenues soaring and a bullish outlook for the future, Accenture's results are more than just numbers. They represent a source of hope for Indian IT companies which have been going through a complex landscape recently. In this video, we will discuss Accenture's results, its significance, and how these recent developments are shaping the future of Indian IT sector. Now, let's decode Accenture's financial performance. Accenture reported impressive results for the first quarter of fiscal year 2025, ending November 30, 2024. The company achieved total revenues of $17.7 billion, making a 9% increase in the US dollars and an 8% increase in the local currency compared to the same quarter last year, witnessing a broad-based revenue growth across markets and industry verticals. A major chunk of revenues came from the American market, which increased at 11%. In terms of verticals, health and public service witnessed a 12% increase, followed by the product segment, which includes its cloud products and platforms. In terms of segmental performance, both segments showed healthy growth, with consulting revenues reaching $9 billion and managed services at $8.6 billion. However, new bookings were recorded at $18.7 billion, a slight increase of 1% year over year. Lastly, the company also witnessed a surge in its operating margins and earnings per share. EPS stood at $3.59, reflecting a 10% year-over-year increase on an adjusted basis, while operating margins remained flat, but grew by 90 basis points from the previous year on a GAAP basis. Now, what's more important is the future guidance given by Accenture. Accenture raised its revenue growth outlook for fiscal year 2025 to between 4% and 7%, up from an earlier forecast of 3% to 6%, creating a storm of positive sentiment not only for Accenture but other IT stocks as well. Following the results and the guidance, Accenture shares surged by an impressive 7%. And that's not it. Even Indian IT stocks that are listed on the US Nasdaq exchange witnessed the positive air. Infosys and Wipro ADRs both experienced a surge of up to 3% following the developments. In context, ADRs are financial instruments that allow investors in the United States to invest in companies like Infosys and Wipro. Hence, these companies trade in US dollars with the ADR suffix added to the name. The list on the screen displays the Indian stocks listed on the US exchange. Now, why are Accenture's developments so significant? Accenture's optimistic outlook has created a ripple effect in the Indian IT sector. Given that over 40% of Accenture's workforce is based in India, its performance is often viewed as a trendsetter for the Indian IT companies. Several brokerage firms expect that domestic Indian firms will benefit from the increased demand for generative AI and digital transformation services spurred by Accenture's strategies. As we mentioned earlier, following the announcement of shares of the Indian IT companies surged as investors reacted positively to the news, reflecting confidence in a recovery phase for the sector after a challenging period. Now, adding another layer to this narrative is the recent decision by the Federal Reserve to cut interest rates by 25 basis points. Though it is lower than the 4 rate cuts predicted earlier, 2 rate cuts are expected next year. This move is expected to have several implications. First is increased IT spending. Lower interest rates typically lead to reduced borrowing costs for businesses, potentially encouraging them to invest more in technology solutions and services. This could further boost demand for Indian IT services from both American and European clients. Second is positive sentiment. The Fed's rate cut may improve overall market sentiment, leading to increased spending on discretionary projects within corporations that had previously been cautious due to higher financing costs. That said, while 2025 seems set for a mid-rate cutting phase, the outlook could change dramatically once Trump takes office in January. If he imposes the tariffs he hinted at, inflation in the US could spike as goods become more expensive. In conclusion, Accenture's strong Q1 results not only highlight its operational resilience but also set a positive tone for the Indian IT sector. With rising demand for advanced technologies like generative AI and supportive macroeconomic conditions due to interest rate cuts, Indian IT companies are well positioned for growth in the upcoming quarters. As we move forward, these are what you need to keep an eye on when it comes to Indian IT sector. We need to listen closely to what companies are saying about their deal pipeline. Are deals getting postponed, scaled down, or even cancelled? Keeping an eye on how top clients and core business areas are growing is crucial. It's also important to see what the outlook is for profit margins. Finally, how companies are managing their workforce. Are they hiring more or are people sticking around? Keeping an eye on risks like US inflation spikes due to potential tariffs under the Trump administration, which could alter the demand dynamics. These factors will give us a clearer picture of what to expect from the IT sector moving forward. If you want us to do an in-depth analysis of IT stocks, do let us know in the comment section below. Having said this is Neha signing off.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.